Hello, my name is Garrett Alexander. I am a partner with Game On Financial, and today I'm going to be answering some of your questions. All right, let's talk about some of the biggest challenges I see content creators face from the get-go. So out the gate, the top three things that we see content creators facing all the time are going to be no set of books. They have no bookkeeping, nothing out the gate. No real business relationship with any kind of bank or anything like that. They're commingling funds with their personal account, stuff like that. So even if they had a set of books, they're generally very dirty. The third thing would be taxes. Now, generally speaking, that's the first thing that people come to us about, but they don't even know they need the first two. Well, the third one, it's much more difficult to resolve that issue if we don't have the first two correct. All right, so here are some of the most important suggestions I could give you. Here are things that we get all the time when we try and bring on new clients, but also just questions in general that I get all the time. And it's what are the things we see the most? And it's at some point, we see a break in the process where it had a content creator just started a little bit sooner trying to get these things under wraps, we would have been able to save them a lot of time, a lot of money, maybe a lot in taxes. And what I mean by that is in the beginning, while you're small, it's easier to track these things. So for example, maybe get an LLC if required, then get a bank account and get a bookkeeping software early in the process rather than waiting till year end to do it. By doing that, you are effectively setting yourself up so that when tax time does come around, it is much easier to hand it off to a tax pro should you need one. Now, when people trying to do it on their own, you run into all kinds of issues. By hiring a CPA, naturally, you're usually going to get the best end product when it comes to tax returns, tax savings, all those things. But you got to get the first two right first. So we start with the bank, Relay, then we go to the books, be it QuickBooks or Xero, and then we get to the tax return itself, which is where you would want a CPA to be handling something like that. That's what I would recommend. Start from the beginning, start right while you're small and while you're capable of tracking these things, and set up the foundation for success before you get to a point where it's too hard to manage all of these items. Now I want to give you guys an example of where this could have gone wrong, where we didn't set it up from the beginning. Is I've actually worked with esports organizations. I have one in particular that I'm thinking about where when they initially came to us, it was after the fact. The entire year had gone by. They didn't have any structure at all, really. They had the LLC, but no separate bank account. This was an esports organization, a true organization running off of one of its partners' personal banking account. And by the time that they came to us, there was no set of books, nothing. They were very surprised to find out that not only was the tax situation going to be grim just because of looking at basic numbers that they had formulated, it wasn't looking great from the get-go. So they were very surprised with that number because they had no idea going throughout the year. But also our fee just for catching up all of that work, for doing the tax return, plus the amount that they were possibly going to owe once the taxes were done. You're talking about multiple large bills adding up very quick in a short time frame. Ultimately, again, it was not a pretty picture and they were not happy about it, but we took the steps going forward to ensure that it did not happen again. And that's where truly having a tax pro in your corner does help. It costs a little bit more, but you're paying for the communication and the advice that you get throughout the year. So contrary to that being I guess, an example of how things could go wrong, there are some examples that I can think of in my head where we had clients who came to us before the end of the year and they reached out. They had started to do the work preliminarily, but they grew too fast, which is not a bad thing. They recognized they had a problem. They came to us. What we immediately did was get them on a separate business bank account. We walked through bookkeeping, got them set up. We started tracking income and expenses. Now, where we could, we started, I would say this was probably in August or September, so close to year end. And we were able to even get their payroll restructured so that when tax time came, they knew what their tax bill was going to be long before April 15th or even March 15th, which is the business filing deadline. So that's an example where just even though you came to us later in the year, we were still able to get in there before year end and make these adjustments that we need to make to get the business where they need to be. And again, It was an example where the tax was still relatively high. We just paid it incrementally over time. And the client did not mind that because we were able to get in there and save them, not only save them a little money, but give them the communication they needed to know what the tax was even going to be. Most people are terrified because they're operating blind, they're working in the dark. When you're able to illuminate that for them and let them know, generally speaking, they understand. In this case, the specific case I'm thinking about, it was tens of thousands of dollars. It'll work on scale, so a smaller operation, it'll be smaller tax savings most likely. But that just goes to show if you set everything up right from the beginning, or at least ask for help before year end, somebody should be able to get in there and make the changes necessary to get you where you need to be. And then from there on, it's actually easy because going into the next year, everything's already there, it's done, and you're rolling at that point. Get started early, track these items early because you don't want to end up in a situation where there is nothing we can do. It just is what it is. Ultimately, that is where a lot of businesses, especially those who are struggling, find themselves. Tyler from Texas wants to know, do I need to set up new businesses if I have multiple revenue streams? I make money from YouTube ad revenue, affiliate deals, an e-commerce store, and occasional guest speaker fees. Is there any advantage to setting up a new business entity for the different income types? Should I be opening up new bank accounts for each of these revenue streams? So Tyler, my answer is it depends. Now, the answer is actually pretty simple, but it could get very complex. What I would say out the gate, just off the cuff, is we want to structure your business entities based on what the different revenue stream types are doing. So for example, I could easily lump in YouTube ad revenue, maybe money from Twitch, affiliate brand deals. I could lump all that into one category. Where it gets tricky is if you start adding things like rentals or an e-commerce store like what you mentioned in your question. So an e-commerce store, we have much different considerations. For example, sales tax in all these other states. Whereas with YouTube ad income, sales tax really is a non-event. Things like that, and this is a good reason to consult a CPA, is where it gets really, really tricky. I would recommend consulting a CPA because that is a very valid question. In the beginning, it gets very easy, but with most of our content creators, it can get very, very tricky very fast. Laura from Wyoming wants to know, can you explain accrual versus cash accounting and the best software or method for keeping track of finances? Yes, absolutely, Laura. I can help you with that. So accrual versus cash is kind of a fundamental concept in accounting. It's what we learned about very early on. What we're looking at here is how you record your income and expenses based on when they happen and what triggers we're looking for. So let's start with accrual, for example. The easiest example I can think of is I sell a service, right? So I do accounting work. Let's say I do a tax return and the tax return costs $100. When I complete the work and I send that invoice out, I record revenue at that time. Now, let's take, on the contrary, cash basis accounting. In cash basis accounting, I do not record revenue when I send the invoice. I actually have to wait until I get paid. So for example, if I'm doing your tax return and I'm waiting on your payment, I do not record revenue until you pay me the $100. The same works for our expenses. I run a business here, right? I'm preparing tax returns, but I have to pay bills like everybody else. So a utility bill is a great example. I receive a bill from the utility company. Well, in accrual basis accounting, I record the expense when I receive the bill, right? The utility company has performed the work. I owe them the money. It is therefore an expense at that time. On the contrary, again, under cash basis accounting, if the utility company sends me a bill, I do not record the expense until I pay it. So 3 months could go by, 6 months could go by. Until I pay that bill, it is not recorded as an expense. Now, I want to give you a summary of when this actually comes into play. This, generally speaking, makes the largest difference at year end, right? Because throughout the year, most of the time, bills get paid within, say, 30, 60, 90 days. But at year end, we're looking at a situation where for tax purposes, we may not record revenue or expenses until the next year. And that could cause an issue, or it could be helpful in some ways. If we do our work and we're cash basis, if we do the work in December, but we do not get paid until January, that may not be taxable income until January of the next year. Now, I am not advocating you just push all of your December revenue into the next year and record all of your December expenses in this year. That's not exactly how it works. But that is the difference between accrual and cash. And again, I would feel bad if I told you what the difference between the two is, but didn't tell you when it's actually applicable. Generally speaking, the end of the year is when it makes the largest difference. Would you recommend one or another for content creators specifically, talking about, again, accrual basis versus cash basis? I would not necessarily recommend one over the other. At the end of the day, it should even out, even over the course, it may be over the course of years. Generally speaking, cash basis is what people start with because it is, again, generally speaking, the easiest to track. So we usually recommend, it's not so much a recommendation as it's just kind of what you fall into by default is cash basis accounting. We will get into accrual if there's something that we see that it may benefit the content creator to do so. But generally speaking, you won't see that unless you run maybe a large construction company where there's a lot of invoices and a lot of bills that they're just the lead time on ordering products. If you have lead time for products and anything like that, content creators generally don't run into that issue. In fact, the only time they really invoice other third parties is when perhaps they're invoicing for, they did a brand deal or an affiliate deal or something like that, and they're just trying to collect the money. There are a lot of entities that pay net 30, net 60, whatever the case may be. That may be a situation where we look at it, but generally speaking, YouTube ad revenue, all that stuff, it doesn't make sense to get into accrual accounting for our content creators. They receive money pretty instantly, and then they're also going to pay their bills pretty instantly. All right, so I've had fun answering the questions today. Again, my name is Garrett, partner at Game On Financial. You can find us at gameonfinancial.com. You can also find me on Twitter at Your Local Tax Guy, and that's pretty much it. And like I said, I've enjoyed answering your questions today. And thank you so much to Relay for having me. I enjoy the team at Relay. Go bank with Relay. They are the greatest banking operation known to man. I swear by that. If you're banking with somebody else, what are you doing?